Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, August the 1st. The year's 2019. Let's talk trading. Monthly open. We're starting a new month. Now, one of the things I had mentioned last month was that maybe I would pick a pair that I'd never traded before and go through all the steps. But when I looked at the charts this morning, I don't know what's going on in the markets, but there are some really good opportunities, especially if you're a rat zone trader. So we'll take a look at those and we'll just see what happens, okay? But just remember, these videos for educational purposes only, and your results may differ from mine. So always keep in mind that forex trading is extremely risky. And if you need help, seek it from an accredited financial professional, right? You guys know the drill. And with each and every trade, you must have your money and risk management in place. There's just no way to be successful if you don't. Sooner or later, you're going to get bit if you fail to have your risk management, as in your stop loss, in place, and your money management, as in taking profit off the table when you can, in place. Okay, we see here on the weekly chart, we still have these pound pairs that haven't filled. I think yesterday there was the dollar franc hadn't filled, but you see that filled. It's Thursday, and unless something really triggers the market, I don't think these pound pairs are going to fill. And on the week here on the euro yen, you see it broke out of the previous week's low. Nice trade there. We're 12 pips off the weekly low, now 13, as you see. And year, month, week, and day are all red. It opened below the previous midpoint, the previous day's midpoint there. And you see what happens. We got 1, 2, 3 in a row. Look for a a buzzard reversal. Who knows, it might go down lower. If you scrunch the chart, you see that really interesting day, first trading day of the year right there. And we're rapidly approaching it, it seems. 131 pips off the yearly low at the moment. And if we look at the month opened below the previous month's midpoint. It's already exited out of the previous month's lower wick zone. So once again, the wick zone trades proved to be profitable. I was listening to a podcast before I started on this video, and it was interesting. The lady was talking, and she said some things that I really agreed with, and then she said some things that I didn't agree with. But you see, that's why there's trading. That's why there's a market, because sometimes we agree, sometimes we don't. When we don't, somebody's buying, somebody's selling, somebody's waiting. One of the things I agreed with was you really need to know when not to trade. You know, most traders are focused on finding that entry so they can jump in and start to get part of the action, as opposed to saying, nope, it's just not right. This is not right. In other words, look for the conditions that make things not right, that make it not the time to trade, as opposed to making it the time to trade. And of course, in Forex, as in most trading, you can trade either short or long. So sometimes you want to trade short, sometimes you want to trade long, sometimes you just don't want to trade at all. So focus on the not trading at all point. And if my voice sounds funny, it's because my allergies are acting up. So you can see here, we just saw 119.70 0.5, a psychological level here. And if we go back to the daily, we can see it broke that low, broke out all those wick zones. And here we have the first day of the week. You can see yesterday, first day of the week's range, it broke through. Over 500 pips below the yearly open. Now, this is a very neat, interesting looking column here on the dashboard. We look at the year. There's a 1, 2, 3, 4 pairs are up for the year. Everything else is down. First trading day of the month here. Let's see, you're going to need to update the chart because now we're going to have to look at the August for 2019 as opposed to a year ago. And you see the 3 ball at the bottom thinking about reversing. You know, one of the things I disagree mostly when people start talking about trading time frames, it's like you don't trade time frames, you trade price. You just look at different time frames to get an idea of where price is in relation to a bigger picture or a smaller picture. But back to when to trade, when not to trade, if you think about it, and I mean, if you really think about it, there's only a couple places where you should probably be engaging in trading because that's where we measure from. The open. If you want to enter a trade, it's probably best to get in at or near the open price because price is going to move away from the open. And if you're on say you're an intraday trader, a scalper, you know, you're not going to hold anything overnight. Another place to get in a trade would be at the previous day's low or previous day's high. There's usually going to be action around there. And you can see it in just about every chart that you look at the open, look at the previous day's low or the previous day's high, and you see what happens. I mean, so if price isn't anywhere near those locations, why enter? It doesn't make any sense, really. Now, the exception to that rule, or maybe we could look at it as another place to enter, would be near the day's high or the day's low, looking for those rat reversals. Because we know, based on statistics, that the high minus the top of the candle and the bottom of the candle and the low are usually going to be more than 20 pips. You know, I probably need to rerun those frequency distributions because of the compressed ranges. They haven't been as big as they used to be. So I might have to put that chart up so we can just verify those statistics. Inside bar, we had it 4 days ago. Yesterday, price broke out of it. So you see that inside bar trade was once again profitable. And right now we've got the pound yen showing an inside bar from yesterday, 1 day ago. And range 1, 2, 3, 4, 5 over 100. Euro yen clocking in at 100 on the dot. And here showing the action, the open, previous day's low, movement off the high. You see that? You see right there. And that's high to close. We really want to know high to, in this case, we want to know high to open, which is 30 pips. And close the lows only 5, looking for that bounce back off of that low. Oh, one other thing, some people pointed out, the wick zone, you want to trade the breakout. In the rat zone, that's where you want to trade. You don't trade out of the rat zone, the top of the rat zone. What you're really looking for is to enter sometime while price is inside the rat zone. And we'll see that in just a moment here. Okay, there was the pivot. It was above the open, so we had a long bias, a trigger here. If you put your stop here, you were stopped out. Second entry, hit your target. Then all bets are off. You see we were making lower lows here. Green right there, that should have been a scratch trade. Take your short entry, and it just paid off. And this is the way you analyze this in real time. It's not a hairy hindsight. And you see the weekly open was there. Price didn't go above it, so you might have even decided to short at the daily open. And speaking of the rat zone, here we go. So this is not the entry. You want to enter somewhere here. So you can use a rat reversal, a turn trade, whatever entry method you want to use, so long as it triggers inside the rat zone, that is your entry. Now, of course, if you look at the chart here, this wasn't a rat trade because right now we didn't have the range. So now it's time for the green rats to start the feast. And as I say that, price just looks like it's going to make a new low, possibly here. As we showed before, we took out the pivot. Right there, we took out the pivot. So we have that missed pivot from July. Looks like we're making new lows, almost 300 pips away. Yeah, we just made a new low. As you can see, putting it in here, 3 ball at the bottom. 1, 2, 3, 4, 5, 6. H1 red candles in a row, looking for a buzzard reversal. Wick zone. See, we play the breakout of the wick zone, but we play, so you don't enter your trade inside the wick zone, you enter it right there at the edge. Long, short. Of course, you can do what you want to do, but that's how the method is supposed to be traded. Once again, horizontal lines, daily, weekly, monthly, open, high, low. I just like the simplicity. And the tick chart, we've got about 5 pips or so of movement here. Nothing earth-shattering. Simple Einstein line. There was a long trigger, but as you can see, based on what previous, there was really no, this is telling you don't even trade it. It's like 1, 2, 3. It's just not happening. Short trigger on the other hand, you see there was more movement to the downside. You can see it's a red day. That was a trade worth about 5, 6 pips or more. So, fellow traders, tomorrow's NFP. Just remember, It's not what you trade, it's how you trade it. So go out there and drain the banks and subscribe.